Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. Been a lot of talk on the street lately about how gold supplies are diminishing and vaults are being cleared out and demand is super high. And even on CNBC, they had one of the stars of Pawn Stars. That's P-A-W-N, Pawn Stars. And he basically blurted out that gold and silver were getting very hard to come by. So I thought, who can I have on to talk about the supply-demand quotient of gold and silver? And that man is Tom Cloud of CloudHardAssets.com. Tom Cloud, thank you for joining me today on USAWatchdog.com.
Greg, it's always a pleasure to be with you. We go back a long time and appreciate the job you do for everybody.
Well, I want to give people a little bit more insight if they don't remember, the build-up and what you do from before. You've been in the, hard asset investment arena since the 70s. As of late, you've been specializing in gold and silver bullion. You have a couple of thousand clients, at least that have $1 million net worth. 500 or 600, you have said in the past, have 20 million plus net worth, and these are all people who are buying gold and silver bullion. And I guess my first question to you right out of the gate, is there any less buying now that, gold has been under attack? It's come down pretty significantly from, 1900 or 1600 or whatever you'd like to pick in the last couple of years down to around 1250. I think it was down $10 yesterday. Is there any less demand in your arena where you're buying clients for very wealthy, at least $1 million plus net worth people?
There's really not, Greg, because I'm in the physical gold and silver business. So I'm not, if somebody liquidates an ETF, I had a client the other day who liquidated a several $1 million position in an ETF because he said it's time that I need to go in my hands and I'm not willing to have an ETF anymore, based on what Andrew McGuire said and people have testified to, and what we know about ETFs today and future contracts. So people now, especially the wealthy they are, they're wanting to get, and the banking problems going on worldwide, they want to get the physical gold and silver in their hands.
So you're finding people who are saying, hey, I'm worried about these bail-ins over in Europe. I'm worried about bail-ins here in America. I'm worried about my assets not only being inflated away, but being confiscated in a bail-in where depositors and bondholders and shareholders are all going to help float the bank for all their bad investments. Is that the mentality you're seeing with your 2,000 or so clients?
It really is, Greg. I mean, I've had clients call me. I had a law firm call me and tell me their banker told me to get everything out over $250,000. And then, there's a lot of rumors out there. I don't have any way of knowing, but the FDIC is saying people are saying the FDIC is going to drop deposit insurance from 250,000 account to 100,000 like it was prior to 2008. Now, whether that's a fact or not, I don't have any way of knowing. But these are the kind of things that we're hearing on the streets. If you're an investor, or whether you're large, medium, or small, you don't want to be bailed in a bank, and even if you lose 10% of your deposits, like the little guy did in Cyprus, where some of the big guys lost 80% on the bail-in, and I think that's the thing. But the best thing I can tell you is I was talking to a major wholesaler last Wednesday or Thursday, and when prices were going down, and I said, how many orders have y'all done today? And he said about 560. I said, how many people have sold to you? He said 20. 540 people were buying, 20 people were selling. And that's about the same numbers my business has been. There's nobody, I'm getting people that are liquidating ETFs and buying the real physical metal for delivery.
So you're not seeing your clients, there's got to be some of your clients that said, hey, gee, Tom Cloud, listen, man, you put me in gold at 1,600 or 1,500 or 1,400, and now it's, around 1,250. Are there anybody who are mad at you, or are you seeing clients saying, hey, wow, you put me in at 1,500 and boom, hey, it's 1,250, time to buy some more? I mean, what's your range of responses for this?
I think you have both those. Yeah, I think you have both of those. I think you have the guy that looks at it as an opportunity when the price goes down. You do have the ones that get a little bit upset. But what we always try to tell them and educate them is this is a percentage of your net worth. This isn't the only thing you put it in. You have other vehicles, but once you know the percentage you want in precious metals for protection against the fiat currency and the bail-ins and everything you and I are talking about, then yes, so they're happy because the percentage there, if it goes down, they'll liquidate something else and buy some more gold and silver to keep it at the percentage they want.
Were you telling me that is supply tight? Are the wholesalers saying there are certain products you cannot get, or certain products you have to, wait a long time, whether it be silver eagles or gold eagles or 100-ounce bars or whatever? What is plentiful and what is not?
Well, the U.S. has done a good job of gaining on the gold, and we're selling gold, some U.S. Eagles live right now, but the silver is a whole different story. When you see the month of May broke all records for silver eagles, over 4 million of them in 1 month. I haven't seen the figures, for June yet, but I mean, you're looking at about a 3 or 4 week delay from the Canadian Maple Leafs, the Eagles, and even the Buffalo Silver Rounds that are so popular today. I mean, they have 2 and 3 week delays, but the great thing is if you have a relationship where you can keep ordering and keep your client's money until they deliver the metals to me. My client's money never goes at risk. I keep it in an escrow account until I receive the Eagles or Maple Leafs, and then I pay the supplier and send the physical gold or silver to the client that bought it. So I don't have that problem, but a lot of people do. A lot of people have that problem. But I don't have that problem from being in it so long and having excellent reputation as paying and doing exactly what I say I'll do.
Well, what about your really wealthy clients? Like, for example, the client that liquidated a couple of $1 million in GLD, he's going to need like 2 or 3 or 400-ounce bars. I don't even know what increment you would put somebody in. Can you get that kind of quantity?
Well, in that particular case, everything he did was with the Royal Canadian Mint. We went with 1 ounce of their new gold COMEX bars they started making over. So we had a lot of Royal Canadian Mint, and then we used some Perth Mint bars to finish it out. But no, we did it all and got it done, and all of it's been delivered to him in less than 2 weeks. He's got the whole order in his hand. But you can go 10-ounce bars and kilo bars. But quite frankly, I mean, a lot of your listeners already know this. When you get into 100-ounce and 400-ounce bars, that's really the commercial user, central banks. And while I could get them if I had to, it's really not a product readily available to dealers on a day-to-day basis. So it's saved for the, quote, central banks and the big boys.
So the big boy bars are really hard to get at this point.
Really hard to get. Really hard to get. And when you saw last week the 580-ton purchase on Thursday that drove gold from 1180 up to the 1260 range yesterday, I mean, that's 1/4 of yearly annual output. And now we're hearing next week there could be a 500-ton purchase by central banks, which would be another 22 or 3% of an annual output. So you could literally have in 2 weeks, if the rumors are correct going around Europe, that over of the output that comes out of the ground annually could be purchased in less than a 2-week period. And I think that's highly likely that will happen after the long vacation holiday, July 4th, 5th, 6th, and 7th.
So silver is nearly impossible to get, very difficult to get.
The COMEX bars are really hard to get. Johnson Matthey's like 6 weeks behind on delivery. And they'll still take orders, but they tell you it's going to be a while before you get them. But there are other COMEX brands that we can get a little quicker. Once again, the Royal Canadian Mint doing a tremendous job on the new silver COMEX bars they're making. So yeah, we have a good situation there to get those bars.
If you're getting as much as 6 weeks, delays in delivery, when it was plentiful and you could had no problem getting any kind of delivery, how short of a time would it be for you to order a gold bar or ounces of silver and then you take delivery? How long would it be in normal times?
It'd be in my hands. By the time I called an order in, it would usually be in my hands in 3 to 5 days.
And now it's 5 or 6 weeks.
And now it's depending on the product, between 2.5 and 6 weeks to get. Now there are some live gold items, as I mentioned earlier. And we've got gold eagles, some gold kangaroos, Krugerrands that are live right now. People can buy, lock in, and have them in 3 or 4 days. And once we get their payment cleared.
But let's say I wanted to have 300 Krugerrands. Could you fill that order?
Yes.
You could.
Could fill the order, yes.
And other people in your sphere.
Maybe a week.
Other people in your sphere that don't have your connections, and your connections go back to the 70s, are they having a hard time getting product? I mean, is it like the guy who was on Pawn Stars, P-A-W-N, Pawn Stars, that said, wow, it's getting hard to get a hold of gold and silver? Are other your compatriots in the field that are bullion dealers that are selling to their clients, are they having a harder time than you?
Well, they have a much harder time, Greg, because they don't have an arrangement where they can hold their clients' money until the product's delivered. They don't have that luxury. So probably 10 to 15% of my calls in the last month and a half have been small dealers wanting me to give them credit to sell them something. I say, no, I'll sell you something, but it's like a regular client. Your money's going to be in my account. It's going to be in my account before I send you the product. But I mean, I am selling some to some young dealers that I know that I respect what they're doing, the way they're doing business. But certainly I'm not going to send them the metal and wait on payment.
Yeah, so
they
you're
really are having a hard time. They really have and if they take their client's money and they can't deliver it for 6 or 8 weeks, they're losing credibility. It's tough. And I was in there one day. I was in that position one time. It's not hard. It's not fun when you've got people wanting to buy from you and you don't have the credit to get it without their money. That's called growing pains in this business.
And you are now selling at least 15% of your business is smaller dealers that are wanting you to do a wholesale deal with them. Their supplies are tight. That's your metric.
That's been the last 2 months.
Supplies are tight.
That's not year round, but that's been the last 2 months.
Do you think it's tighter now than any other time you've seen, or is it as tight as any other time you've seen? I mean, is this, in terms of tightness, how tight is the gold and silver physical market?
Well, there's only 2 periods of time, Greg, that even ring a bell. Going back to March of 1980, during the Hunt Brothers fiasco, when silver went from $5 to $50, and you talking about tight. I mean, it was several months delivery time sometime, and very frustrated people. The next time was after the 2008 crash in the fall, October, November, December of 2008 were very hard delivery. I mean, I had stuff coming in 10 weeks on some products, 9 weeks, 8 weeks. But this is not quite as long yet, but we're in the seasonally worst time of the year for demand, and it's going to start picking up Monday after 4th of July, and it'll continually to grow through Labor Day, and then after Labor Day, we think it'll really pick up.
So the other 2 times that were as tight as today is the 2008 financial meltdown and 1980 when it was spiking to the moon. That
was when the interest rates were up 16, 17%, money markets were 14, 15%, and gold had gone from 77 to 800 in 30 months.
Okay, and the last question here, and I want to get this in. Isn't this kind of bizarre that you have a declining price and increasing demand? I mean, isn't that something, is that something that you've seen before, or is this bizarre?
No, it's bizarre because the ETFs, once they came on board, you know, there's always a good side and bad side to everything. And certainly the ETFs created demand for people to buy gold and security. where they could hold it in a security and not have to take delivery of it. But as the investor gets educated, he wants to go the other way. He wants to liquidate that and go back to the physical. And that's what we're seeing now is people are liquidating paper. But the best statement I've seen in the last 2 weeks, I don't know who to credit it to, it wasn't me, but they said for every 100 people in the world if you ask everybody in the world that owned gold to stand up, for every 100 people that stood up, if they said sit down if you own an ETF, or sit down if you got a futures contract, there'd only be 8 people still standing that own physical gold and silver. And that's what I see going on now is a move, especially the wealthier the person is. And I can tell you story after story where they're now moving to liquidate the ETF and then turn around and buying physical. But certainly some are just liquidating ETFs and getting out. But others are liquidating ETFs and buying physical. And I really think this thing is going to get much tighter this fall than it is right now.
So most of your clients that are liquidating ETFs, would you say most are liquidating ETFs in gold and then going into physical, or half? Or what percentage of people are liquidating the ETF and going straight into physical?
Well, my clients that have all the physical they want and they were using ETFs for their access are probably about 50-50. But for other people, you can't say because the stockbroker controls a lot of those people, and they may just tell them to get out of gold, period. So it's hard for me to give you a number for anybody else. But for me, if a guy's got $1 million worth of physical gold and he's got $1 million in an ETF, he's now liquidating that $1 million and he's moving it over to physical.
So
he's
most
not changing
of your
his
clients,
percentages. He's not changing his percentages he got in gold. He's just changing that he's taking delivery of it.
So most of your clients are liquidating ETFs and going straight into physical. Is that correct?
A lot of them, yes. Yes, a lot of them.
The lion's share.
The lion's share, absolutely.
Liquidating the ETF and going around. What happens when the ETF is done liquidating?
Well, it's always, we already know it's not there anyway. They want you to take paper, and if you read the back of any of the major ETFs, you can't take delivery of physical gold. So you own a derivative. Any way you look at it, you own a derivative because you own a piece of paper, and Andrew McGuire's already testified the physical gold's not there, the guy that did the trading for one of the major ETFs in the world. So, it's not there, so they don't know anything except a derivative anyway. And now we're seeing figures on derivatives, even on your website, $1 quadrillion, $700 trillion, whatever the number is. But those gold ETFs are part of it. They're part of it.
Last question. Are your clients scared? Are they worried?
I think the smaller guys are really scared because it encompasses a lot more than gold. It encompasses the next generation of our children and grandchildren in debts that are just unsustainable. So I really see the little guy that's trying to work hard really scared. I really do. I hold people's hands.
What are they afraid of? What are they afraid of?
They're afraid that this dollar that is being pushed to artificial levels is going to crash, and their retirement account is going to go with it. That's what a lot of them in their mid-50s to mid-60s are really concerned about. And they're also concerned that in some way, somehow, just like we've just seen in Cyprus in the last 2 weeks, they're going to get into the 401ks and start freezing them and making them buy treasuries with it or something. And that's the complaint I hear the most.
All righty. Tom Cloud, cloudhardassets.com. Tom Cloud. Tom, I really appreciate having you on and taking us to school on the street level. Supplies are tight and fear is high. I think that's safe to say. Is that right?
You've named it, Greg. That's exactly what it is.
Supplies are tight, fear is high.
Exactly.
All right,
exactly.
Tom Cloud, I really appreciate having you on cloudhardassets.com. Go ahead. Go ahead, you finish up.
I see it getting worse. Like I said, in the fall is when I see it really, really getting to a point when I think a lot of people will be moving back to gold and silver. And that's when we think the supply will even get tighter.
This fall.
This fall, yes.
All righty, another out for you here. Another plug for you, Cloud, hardassets.com. Tom Cloud, thanks for taking us to school
Thank you,
on the
Greg.
precious metals
Pleasure
market.
being with you.
Thank you.